Hello and welcome to today's Trading the US Open session, fully live and interactive. My name's Tim and I'm one of the traders here at the live trade room. I hope you're keeping well. And so what we'll be looking to do basically is we'll be laying out our approach when we look to engage with these markets. We'll go through some of the high probability trades that we have on our books at the moment, and we'll look for those opportunities. We'll put the charts up on screen, and hopefully we'll be able to get into some trades today. We're looking for opportunities, by the way, across multi-asset classes, from your foreign exchange markets to your commodities, gold and oil, and also your global indices markets like your S&P 500 and other markets like the FTSE, the DAX, the Nikkei. So what we want to try to do when we trade is to have that multi-asset class overview of these markets where we identify certain correlations, and all we're really doing is we're creating, I suppose, some high probability trading opportunities. It's not just random looking at charts. There's actually a method to our madness, and we'll show you how we go about doing that over the course of this next session. So please see our risk warning currently up on the screen. We've got a couple of good opportunities actually currently in the pipeline. So what I'll do is we start every time we hit the trading desk. We start with a review of market moving news. So we just really want to get into the routine of just identifying any major news events that are likely to impact our trading. And the only sort of news event we didn't get really much to worry about yesterday to any great extent. The the major news really, as far as a data release perspective is concerned, is the consumer confidence figure, which is due out at 3 p.m. So we're expecting a fairly decent figure, the 96.9. So this is when it's an index-based survey of households, and they identify the relative confidence with a whole range of things really, but from a household perspective, and the confidence of consumers literally. Okay, so that's what we need to deal with. One other significant I suppose market moving event is what's going on in the bond markets. So the treasury yield is on the increase, and what we saw last week is we saw prices top out at 1.75. They took a bit of a pullback last week, actually during the actual bond buying, some significant bond auctions last week, should I say, 2-year, 5-year and 10-year, I think, if I'm not mistaken. And we saw a little bit of just a bit of calm in these very volatile markets. And now today, really, we've seen this market accelerate to the upside. So a little bit of a concern for these equity markets. And as broadly speaking, looking across these markets, so we'll be keeping a close eye on this bond yield and see what impact it's been having on the asset classes as a whole. So that's an important part of engaging with these markets from a position, I suppose, of knowledge and understanding, where you're actually understanding why markets are moving the way that they are. And what we'll do is we'll bring up the charts straight away, because there's a couple of really decent opportunities, and just want to show you how this stock market is beginning to react to what's going on with the bond yields. And I suppose the thing to just extrapolate really is over the last 45 minutes or to an hour, basically, we've seen this market really break away from, for those of you that are very familiar with your technical analysis, we're seeing this little pattern of lower highs as this market is pushing lower, and we're seeing this little level just stay in here. So this is your descending triangle price action, which can be quite powerful, and there is your strong breakout. The only problem for us was the monthly high just below it. So now we've broken through that level. We're likely to see further downside as a result of this particular move. And how does it fit in with the daily time frame? Well, it looks like it's rolling over these highs. So that's why it is important that we do take a look at the 10-year treasury yield. The simple correlation is that if this yield is increasing and pushing higher, it's not great news for the equity markets, and you're likely to see a little bit of short-term selling. So that's how we're going to look to position ourselves in the trade. Just very quickly across the remaining equities, looking at the Nasdaq, this has been kind of moving in the opposite direction as a result of when the economies are going back to supposed some form of normality. We're seeing a lot of those tech stocks, take a bit of a significant hit, and we know that they're heavily weighted in the Nasdaq composite. So now they're taking a bit of a turn to the downside, and more your industrials and more your the S&P markets had been, let's say, up till just an hour or so ago, actually looking quite bullish. So we've got this bearish market conditions, so we're trading risk off market conditions. So just be mindful there's capital coming out of risk and moving into other asset classes. Now this is why we have a multi-asset class approach, because we want to try and identify which assets are benefiting from the flow of capital. And So you can see that there's a softening. Bitcoin's performing quite well. It seems to be the hedge really for the gold trade. And we've spoken a little bit about this last week, and in that we were attempting to pull back to previous levels of support, which then become resistance, but we never really quite got to that level. But by far the trend is, as you can see, very much to the downside. So breaking below the 1676 is the next major leg to the downside. So it is actually conforming to that sort of bearish view of gold. So we'll keep a close eye on that. We can get in on a pullback around the 1700 or sell below the 1684. So we've got this. Well, it's a little bit lower than the 1684 now, but so below the 1700 is a good sign to look to get in to further lows. Crude oil, it's taken a bit of a pause really. We just extended very briefly because we're looking for this market above that $62 level, and we really failed to kind of close or get up to that level before rolling back over to the downside. And you can see we've just poked his head above and then it's kind of rolled back over. So we do have OPEC on Thursday, so be mindful of that news event. It's quite important. So the gold market we'll absolutely have a look at. Just before we get into the dollar, I think it's probably worth just taking note of the yen, see what sort of position that's in. So if the equities are rolling over to the downside, is the yen benefiting to any great extent? The answer's unfortunately absolutely not. So we're getting, we had a bit of an issue this time last night, or should I say, 9-10 o'clock last night, where we were having the equity markets push higher, but we're also having capital coming out of your safe haven. So it's a bit of a strange market condition for us last night. And we set ourselves up to either look to trade the risk on markets or to look to trade the risk off. Risk on would be your indices markets. Risk off would be, well, as things currently stand, the gold to the downside, and the US dollar is the primary beneficiary of these stock markets selling off. So we can look for dollar strength trades. So that's why our focus can really shift towards that dollar strength. We're not looking to trade dollar strength like long term, but certainly as the dollar is currently strengthening, we're looking to go with that move. So the 1762, we're now down at 1732 level. So we go into these trades. So we'll just identify our trade plan for the session, and you can see what we'll be looking to get into. So the first one is a bit of a no-brainer. It's looking to sell the euro dollar. Potential prices pushing down to the 11600. So hopefully a nice move to the downside for this market. Euro dollar, pound dollar. It has the potential to squeeze lower, just largely from a technical perspective. We've got there's fundamental differences between the euro and the pound. The pound is rolling out the vaccine pretty well. Sorry, the UK economy is rolling out the vaccine pretty well. They're likely to unwind the lockdown conditions a lot quicker than Europe. So it is marginally, certainly from a strength and weakness perspective, to regard the pound as a potentially stronger currency, certainly than the euro, and that's really what trading these markets is all about. It's just identifying strength versus weakness. So we've got these moves in the euro dollar, the dollar yen. So we'll absolutely have a look at the dollar yen. We'll see what other potential opportunities are worth looking at. The dollar Swiss absolutely continuing and is actually breaking out above this level in here. So that's the dollar Swiss. The dollar CAD, it's just trading inside this little range in here, so we don't really need to focus on the CAD too much. We've got actually a break to the upside followed by that rollover trade, so we'll have a look at the Aussie dollar to the downside. Again, it's that dollar strength trade. Not quite in the same boat as the Aussie dollar. We're breaking below yesterday's low, which was indecisive price action, so it's a little bit more bearish, so we'd perhaps stick with the Aussie. We still like the euro pound further to the downside, so we're currently in that trade, and we're currently in the euro dollar as well. Oh no, sorry, we're getting ready to get into that trade, so we'll come into that now in just a second. We're in the euro pound to the downside. So the euro is strengthening against the yen, so it's just showing that the weakest market out there is the yen, and the strongest is currently the pound. Sorry, the US dollar. Excuse me. So below the 1750 was our sort of high probability sell trade in gold. Prices are now down at 1689, so a nice move in that. So we'll have a look at gold. And crude oil, we do like this market to the upside. It's very much expected OPEC to make sure or to suppress the supply of oil further. They extended it last month. They're probably likely to extend it this month, just bearing in mind the difficulties we've had this month with the sort of the hampered rollout of the vaccine, the further restrictions. It's impacting demand. The Suez Canal, the cargo ship that got stuck obviously in the Suez Canal has an impact on supply, so it's probably likely that they'll just keep things relatively steady. So our bias is still actually to the upside for crude oil, and it's currently selling off as things stand. The S&P 500, so it's rolling over to the downside. We're now below this daily low, so we can have a look at the S&P to the downside. Certainly the Nasdaq below yesterday's low would be, we'd certainly expect further downside. We have a double top up here for the Dow Jones. If the FTSE is rolling over to the downside, we might look at we'd have a fairly tight opportunity there for the Dow Jones. Yeah, what sort of stop loss would we have on this? So actually quite a tight one. So 150 points. So that'd be quite a tight stop loss for the Dow Jones. So that might be worth looking at. Yeah, let's work with the Dow Jones. And just looking at the European side, they're just rolling over to the downside. The DAX is the outperformer really. Mild weakness across the Nikkei, more weakness across the FTSE. So look, that's our trade plan. Let's go and build this up just before we get into this trading session. Right. So we put our trades currently up on screen. These are our high probability trades. You get the You get the benefit of trade selection. You get the direction and the price at which we're looking to engage. We'll be identifying now in just a second. What I'll do is I'll just tidy this up a little bit. So we've got the cash open in approximately 30 minutes. Okay, so the dollar yen next. So we're accelerating to the upside. So really it's this dollar strength trade that we are looking at. So the euro dollar to the downside, the dollar yen to the upside. The Aussie dollar next. So trade below that daily low. Let's see if that gives us any opportunities. We'll delete this. Okay, that's the Aussie dollar. So gold next. So these aren't randomly selected markets, just for your information. These are markets that we were looking at last night. So we are, it's important to be prepared for the moves when they occur. Let's bring this level down here. And the last two are the S&P and the Dow Jones. So we bring the S&P Okay. So we want to get in on a little pullback on some of these. So we might be getting close to getting into this trade here. So let's look at it on the smaller time frames. So we've got this little structure in here. We've had this little pullback trade, and now we're anticipating this market to continue lower now. So we've just had a couple of rejections of these lows. So let's see if we can get a close below that level. We can get into that to the upside. The dollar yen. Just to do a bit of analysis. So this is our sort of sideways moving patterns for most of the European session, and now we're getting that little bounce to the upside. So the Aussie dollar looks like it's getting ready to go. So this is our little handle in here. We can zoom right in. So we've had a nice little run up to this little breakout, which is good. We've had a close below that level, 76.16. We've had prices bounce off to 76.07, and now it looks like we're going to get that accelerated move. I suppose with this one we've got a nice predetermined stop loss to 76.39. Prices break below 6,700, so you're talking about sort of a 30 odd pip stop loss in that trade. Okay, so when we get markets that just accelerate like this, you just want to get in on the pullback. So when you get that pullback opportunity, then we can look at taking it to the downside. So the thing is about these markets is that pullback always comes. Very rarely do you get a market that just flies and it stays in that direction. So you often get either a floor being created, like we saw in the New Zealand, in the dollar yen trade, a floor being created for a period of time, and then you get the next leg above. So you either get a floor or a ceiling, or you get a pullback the vast majority of the time. So the euro dollar is looking threatening to push lower. So too is this trade in here with the Aussie dollar. We can probably look to get into the Aussie dollar. Let me see.
Evening Standard here saying that UK's fourth COVID vaccine could be ready in 4 weeks, according to the Novavax trial chief. So that's the Evening Standard citing the Novavax trial chief there, that the UK's fourth COVID vaccine could be ready in 4 weeks. We will post that full piece on the board for those interested.
Okay, that's interesting. More vaccines coming online. So look, we've got our Aussie dollar trade ready to go. So we look to get into that trade. So there we go. We've got into this trade just below this little structural break to the downside with a stop loss well above the this little structural high just sitting in here. So so we're in that trade. We're quite close to doing the same here with the. We just want to just close a little bit further and just see some. Okay, sorry, just bear with me a second. So the euro dollar is just hanging around these little lows down here. So if we get a flush lower, we'll get into the euro dollar to the downside. If the dollar yen can pull back a little bit and begin to turn around, we can get into that buy trade. The Aussie dollar, and we've always got one eye really on the S&P 500, which is very likely to roll over from these highs. Same situation with the Dow Jones. And the gold, we just want a little bit of a pullback to get in on that opportunity in gold.
We are now moving into 10 minutes until the top of the hour. We get German CPI for March. Prelim read, CPI year on year. We're looking for 1.7% increase on the prior 1.3%. The range 1.4 to 2%. With the month on month, we're looking for a decrease to 0.5 on the prior 0.7%. The range 0.4 to 0.7%. EU harmonised, we're looking for an increase to 2% on the prior 1.6%. The range 1.7 to 2.2%. The month on month, we're looking for a decrease to 0.5 on the prior 0.6. Range 0.3% to 0.6%. A reminder this morning that German state inflation numbers for March were higher than expected, with annual rates jumping 0.4 to 0.6 percentage points. We also saw the Spanish headline rate lifted to 1.2% year on year from a prior negative 0.1%.
Okay, so we've got those trades stacked up, the euro dollar to the downside. We're getting ready to pull the trigger. The pullback in the dollar yen, we anticipate the Aussie dollar to continue its roll over to the downside. We just want to pull back in gold and the S&P 500 to continue its move to the downside. So it's just reluctant to do an awful lot just yet. We've got the US cash open in about 9 minutes, so we don't really have the capital coming in yet. So just be patient for a little bit longer. We might see some market moves. The gold is continuing to squeeze lower. What I'll do is I just need to just pop away from the desk for just a few moments. So what I'll do is I'll just put the intro screen just on for 2 to 3 minutes, and I'll be back to you shortly. Okay, so welcome back. The euro dollar is just hanging around these little lows down here, so it's creating a bit of support. As you can see, the bias is still very much to the downside. So we'll put these levels in for us to focus on. So
10 seconds.
So we've got some important data due out.
.7% for the CPI year on year, with the EU harmonised coming in at 2%. EU harmonised month on month at 0.5, with the month on month at 0.5%. Just to recap that, German CPI year on year in line with the estimate at 1.7%. EU harmonised year on year in line with the estimate at 2%, with the EU harmonised month on month also in line with the estimate, coming in both at 0.5%.
Okay, just in line with expectations for the German prelim CPI data. Some minor positive data coming out of Europe, with the hope that it'll kick into action again pretty soon. Okay, looking for breakout sell trade. This time it's below the 1730. 1730.
Just some colour as I look into the report. Excluding energy prices, the rate of inflation would have been 1.4% in February 2021.
So here we're currently getting the pullback. So we've got that phase. So we want to see if we can get in at the next best opportunity. Similar situation for the euro dollar. There's a lot of resistance in at these lows. So we have that in our favor, and that's what you want to do. You want to try and get into trades which have to work hard to get you out of them. So we need to experience this little bit of a pullback. So looking to sell on a pullback. All we're looking to do here. So we'll just see how this US cash open just plays out across the dollar pairs and also the indices. And what I'll do is I'll just bring up the euro pound just because we're in that trade already. So just seeing what this can do on the daily time frame will help. It looks like it's quite indecisive again. The bias is still to the downside. Want to put in just a little note here. Low 33,100. Potential sell trade below 33,100. So $39.55. So let's see how the US markets now react to this bit of selling. The like I alluded to at the beginning, the sort of the higher yield environment. Which these yields making new recent highs today, as you can see. If I just look at the 5-day outlook, and of course this is the 10-year bond yield. So we've been on this initially a bit of a decline, followed by some steady gains, and now we're impulsing higher, just rolling over the highs just a little bit. We're up at the 174. So I wonder what's wrong with this chart. So a fairly sharp impulsive move to the upside in bond yields is just likely to have a negative impact on the stock markets, which would be quite supportive of our dollar trades. So currently they're just rolling a little bit lower. We did get up to, sorry, I don't know why this is jumping around so much. Yeah, we jumped up to that high of 177. Okay, I better leave that alone for some reason. It keeps jumping. So just rolling over to the downside, so that might take a little bit of pressure off the equities. Okay, so these are our trades currently up on screen. The euro dollar to the downside, the dollar yen to the upside. So we're really looking at risk off market conditions, which is what we discussed last night in our Trade Plan Live webinar. Excuse me. So So we're just currently experiencing a bit of a pullback across these markets. So we're looking for a breakout trade below that 117.30 level. Looking for a buy trade on a pullback if we can perhaps get in. We've just got an issue on our stop loss placement, it might need to be back down here. Aussie dollar just bouncing off its lows, so if it can, it's likely to actually push higher to 76.25, and then we'll see that little rollover trade to the downside. Gold, we're looking for that constructive pullback. So that's what we're likely to see. So it would need to be getting in around the 16.95. That would be the plan for gold. So we're currently taking we're looking for some more European weakness against the pound and the dollar, and just looking for opportunities in that pound dollar strength trade. So we only really saw that risk off trade for just a small period of time, as in a nice break to the downside for the equities, the dollar strengthening. And all we're seeing really in the last hour is just prices just drift sideways, and now we're just pulling back to that important high. So there's your descending triangle. It's quite a powerful position. Excuse me. There's your powerful break. Now we've created a low, so we're likely to get pullback to this level. So there's your opportunity number 1, and this is your opportunity number 2, which is in the pipeline. So a couple of opportunities to get into that trade to the downside. I guess it's a case of making sure that you keep your eyes on the US bond yield story, like the 10-year, for example. You can track and you can monitor that. So below this 39.61, we'd expect probably downside pressure on the S&P 500. So we'll see if we get that opportunity, if that sustains itself. So we're looking for the pullback trade in the dollar yen. We're currently seeing that little pullback trade in the S&P 500. So we're in the euro pound to the downside, we're in the Aussie dollar to the downside, we're waiting to get into the euro dollar to the downside, and we're waiting to get into the pound yen to the upside. So we might need to pack it up there. We've got another trade room with some of our traders in just a little while, so I do have to shoot off, I'm afraid. But we'll be back again tomorrow at 12 noon. So if we can assist you in getting a better understanding in terms of why these markets move the way that they move, and we can certainly show you what we're positioning and how we look to build portfolios, and how we look, more importantly, how we look to navigate them. Then feel free to join us again tomorrow at 12 noon. If you don't mind giving us a thumbs up, we'd appreciate it, and also, you know, feel free to subscribe to our channel as well, and we'll be notifying you. We've got a lot of content going on. We'll be going live pretty soon, so we can send you that content as well, completely free of charge. And for more information, if there's any information that you'd like, or we can perhaps help you learn how to trade these financial markets, then just go to our website, thelivetraderoom.com, for more information, and you can chat with us through the chat function as well if you need. So on that note, these are the trades we're looking for. We're looking for the dollar strength trade. We're anticipating some further equity weakness, perhaps. We'll see if that's the case. We're currently selling the Aussie dollar to the downside and the euro pound to the downside as well. And we look to position ourselves accordingly. So thanks very much for joining us as always. Do take care, and we'll speak to you soon. Bye for now.